Hey ho, way to go. Fed day out of the way. Hey ho, waka waka, what a ripper. Jake, there are many tears for the delusional today. What? There wasn't a pivot? Where's my pause and pivot? Hey, Gary. Hey, Rod. Ted, wow, what a day. Patrick, hello. So much for the soft landing. Uh, hello. I love the JP Fed movie. It looked like a movie from 3 to 4 p.m. It was interesting. Hey, Mike, down we go. We shall see. We'll look at the charts after, but what more important? Hey, George, we got Bob coming on soon. You know what? Bonus day with Bob, so you gotta subscribe. There, we got that out of the way. And in groundbreaking news, no more Comcast here, no more primary Comcast internet, no more Comcast at all. It's gone. Gone like a freight train, gone like yesterday. So, let's bring on the Bob. The
What's up,
Bob with
guys?
with the Bob take on the dovish J-Pow.
Where's Coco?
No Coco. No Coco.
Coco, big shocker. Um, so first of all, I was watching it and I saw the statement and uh, hey Waka Waka, how are you? Hi Anissa. Hey Gary. Anyway, I was watching it and I saw the statement. They put the statement up on the screen and they said they highlighted the changes and they said a couple of changes that may open the door to potentially a step down or a slow down or a pause or a parry or a pivot or a swirl or whatever, a twirl, whatever you want to call it. I just didn't see it. Like the way they read it, they basically said that the switch, when they added in the phrase that they will take a look at the effects of cumulative tightening well, as they decide their next moves. So, I mean, I found that was the part that they seemed to focus on, and I think there was one other part, but that was the part where they really seemed to focus on, basically say that's opening the door for them to step back. Now, first of all, I like to yell at the screen when stuff it looks stupid to me. And first of all, excuse me, I would say that the idea that if the Fed doesn't do 75 basis points per meeting indefinitely, that they've all of a sudden eased. That they've all of a sudden, I mean, you could say they stepped back or paused, but like all of a sudden the market is supposed to screaming rally because they're not doing 75 basis points. This makes, I think, 75 basis points in a row, at least four. Honestly, I don't remember right now. Um, that's just massive. That's never happened before, short of if you take Volcker's tweaking of M2 and M4 to be the same thing. But other than that, it's Volcker. This hasn't happened. So for them to step back and for people to all of a sudden think that was dovish, for them to go from 75 to 50, that's dovish. Or to go even from 75 to 25, that's dovish. Or from even to go 75 to zero and then hold rates here at 375 to 4 for an extended period of time, that's somehow dovish. I find that to be ridiculous. But anyway, I didn't see it in the statement. I really didn't. But stocks were rallying, and I'm perfectly open to being wrong. So, that's fine. I'm looking at it, I'm like, well, I guess I'm wrong. I guess this is dovish. And then I remember I was listening to, I don't remember the name of the analyst, but she said the market is going to look for any excuse to call this a dovish statement. And I remember hearing that today, and I thought, okay, that's what this is. Really, any change at all, short of the Fed saying we're going to do 100 next month, was going to be taken as dovish. Any change to the statement at all. Well, then Powell comes out and he not only refutes that, but there were a couple of things that stood out to me. Number one being it's very premature, in my view, to think about or be talking about pausing our rate hikes. We have a ways to go. That's a quote. Another one where I'm paraphrasing, um, he basically said that we don't do guidance anymore, but if we did do the dot plots, the terminal rate would be higher than it was last meeting based off of data that they have. So, in other words, the dot plots would have been even more hawkish if they were still doing dot plots, which they're not. That stood out to me. And then the last part that stood out to me was I was watching the press conference and some reporter said to Jerome Powell, so as we speak, the market's up. And I look and the market was down. He had already said premature pause thing. And he responded to that, man. He was like, well, I mean, I'm paraphrasing again, but he basically said, well, they'd be wrong. you know? So the first leg down came with the quote of like, it's premature to think that we're going to pause. That's when the big leg down came. It was already kind of going back and forth between positive and negative. And then he said, I'm going to get to Mr. Hans's question because I think that's critical. So that's when the first big leg came down after the it's premature to pause thing was said. And then when that reporter said the market's currently up, what do you think of that? Powell obviously doesn't have a screen in front of him. He had no idea if it was right or wrong. It was wrong at the time. The reporter put down his phone and the market spun around and turned lower, and the reporter didn't know. Also, he's probably looking at delayed quotes because he's a reporter. Yeah, and he responded strongly to that. He didn't like it. So I suspect what we're going to get here now is a flood of Fed speakers to offset any rally that could come off of this. That's what I suspect. Now, somebody in here said, Bob, where's the rally? Well, the rally's already happened if you base it off of what I said, which was fourth quarter is going to be positive. All the fourth quarter has to do, like in the I'll take the S&P futures. All the fourth quarter has to do to be positive is to close above 36.01. Right now, the futures are trading 37.68. So I'm still right. I don't really care about that, but I'm still right. So that's, honestly, I shouldn't even say this. I think this is probably going to turn out to be a short-term buy because we're going to keep getting earnings now, less and less tech, and some of the earnings are going to be better. And honestly, this 3% move down for the S&P, this 3.5% move down for the NASDAQ was really just taking the exuberance out. As I said in the last live stream, all of the rally has been during the quiet period. I think the vast majority of it has been during the 10-day quiet period where the Fed couldn't speak because they had an upcoming meeting. Now they're going to be able to speak. And one of the last speeches we got before the quiet period was Mary Daly, who kind of said something along the lines of, well, obviously we're not going to do 75 basis points at every meeting going forward into infinity. Basically, she said something to that effect. And I agree with that. And I told Jim Iorio on Twitter when he was talking about the Fed needs to pause, they need to slow down the pace of rate hikes. He's been wrong on that call for the last two meetings. And I said, just keep saying it, Jim. You'll eventually be right. After every meeting, keep saying it. You'll end up being right at some point. So that's my take on this right now. I actually think this will probably end up being a buy, just not today. Absolutely not today, in my opinion. Like, you don't want to go out and buy the open tomorrow. China's probably going to get hit pretty bad on this. The yuan is likely to be pretty weak. I think China is going to reverse pretty hard on this particular move that we have today. So that won't bode well necessarily for the overnight action in U.S. equities, but we'll have to see how it plays out.
Hold on one second. Hey, Mr. Hamza, thank you for tuning in. Hey, Options 22. Brian Gardner. Rather impressive. The general market fooled themselves into thinking there would be a pause. So, are we saying the pause is off the table for now?
Well, that's the funny thing about this move. It's not off the table. It's absolutely not off the table. We only so right now the 25 basis point hike in November is gone from the CME Fed Watch tool.
On December.
I'm sorry, in December, right, which would be the next meeting, right?
Yeah, here it
The
is.
25 basis point move is gone. The 50 has the highest probability. Well, the way most people describe a step down or a pause is 50 because they've been doing 75 each meeting. Now you can go back, God, weeks and weeks ago. And I said my base case was 75 in November, 50 in December. And then probably a break, but maybe 25% or 25 basis points early next year. And remember, the Fed could just come out and be like, okay, so we're stepping down to 25 basis points every meeting until we see improvement. They could say that. He did say that they were close to the end of their front loading, which means there's a low probability of 75% next meeting, in my opinion. Very low. The screen you're looking at now isn't showing a low probability. It's showing a decent probability. But I think, like, if I had to handicap it, I'd say it's about 10 to 15%. But then that one comment that sticks with me is him saying that if we were doing the dot plots, the terminal rate would be higher. So if the terminal rate, you guys know what the terminal rate is? Does everybody know what that is?
It's where the market dies?
Yeah, no, the terminal. Well, yes, but the terminal rate would be where the Fed is now restrictive in policy. So right now they think they're still accommodative enough to not slow inflation. That's at 3.75 to 4% on the Fed funds rate. So the terminal rate is where they think the Fed policy is now restrictive to the markets. So that's not a neutral rate. It's different than the neutral rate. The neutral rate, probably where we are now, is where the Fed is not accommodative nor restrictive. So if at the last meeting, the terminal rate was around 5%, and Jerome Powell said in this press conference, if we were doing dot plots, the terminal rate would be higher than 5%. Where is it? Now, just quick back of the envelope math, I had it at about 5.15%. But obviously they go in 25 basis point increments. So you got to say it's 5.25 because it was 5 at the last meeting. So you got to say the lower band or the middle of the band, it's got to be 5.25. So that means the Fed funds rate at 500 basis points to 525 or 525 to 550. Probably 500 to 525 is where you should be pricing it in your head right now. Now, that doesn't mean that they're going to do that all in the December meeting or that they're going to do it in the December meeting and then do the rest of it in the February meeting, which I think is February 1st or so.
It is February 1st.
Okay. So just keep that in mind.
Oh,
Keep that in mind.
I mean, you said data suggests we may eventually move to higher levels than we thought at the September meeting, which right there, okay, now it might go higher.
Mm-hmm.
The question when to moderate the pace of increases is now much less important than the question of how high to raise rates and how long to keep monetary policy restrictive. That was very important, I thought. So yeah, they can step back the pace of increases, but it might go higher and it might stay there longer.
Mm.
So
So look, hey, Pub is getting in my kitchen a little bit. Original Pub is getting in my grill a little bit here. He says Bob's expertise on all things premature. That's uncalled for. It's just completely uncalled for. But then he says, warning, Bob cares more about being right. Pub, don't you want to be right so that your trades work, unlike what's been happening to you lately?
oh,
Wouldn't you want to be right? I don't actually care about being right about this stuff at all because I don't trade my fundamental view. What I care about is because, it doesn't matter what I say in the last one or what I say in the next one. There's always people that will come in here and go, Bob, you said this and you were wrong. It's like, okay, whatever. Here I am. It's like, so when I'm right, I want to point it out. When I'm wrong, I want to point it out. And I'll tell you what, I do that for other people too. Jim Iorio, co-host of the podcast, put up on Twitter, okay, I was wrong about the bear market being over, because he said, I don't remember the level he said.
38.25
Okay, 38.25. He said if we get above 38.25,
on last week's close.
yeah, he said the bear market's over. He goes, I don't mean the official bear market's over. I just think that we're going to move to new highs, and that'll be that. But he did say, but I'd like to see follow through next week. Well, he didn't get it. So today on Twitter, he said, I was wrong about that. I did say that I needed follow through, but I was clearly wrong. I at least wasn't right. And I came back and said to him, no, don't discount your disclaimer, because you did not get follow through. And you were very clear that you wanted to see follow through after the close on there. So we should all do that for each other. We should acknowledge when we're wrong, but we should also give everyone kind of a high five when they were right. I'm constantly acknowledging Coco for being wrong. Like almost every webcast.
Oh boy.
But no, I appreciate it, because you're actually a valuable contributor here. So you're being funny. It doesn't bother me at all. I just want you guys to know that. I want Pub to know that. Keep breaking my balls, Pub. That's how I grew up. I don't give a shit. What else we got here?
Hold on. I got Waka, sooner or later, Mike, you'll warm up to my 85 to 95 NASDAQ overall drop. By the way, there's more intrinsic, just even in a depression, more intrinsic value than a drop of 85%. So, right. Dude, we'd have the markets going away. We would have alien invasion type of stuff or nuclear war to get to down that levels, and then you're not worried about it. So, no, I'm not embracing your 85 to 95% drop. And I've said I am long-term bearish. And by the way, not so sure that the complete rally is over. We don't have a significant topping pattern yet. Yes, we can break a key level. I'll point that out. If we break that level, I'll go for a retest of the lows. But the lows of the bear market are not going to be an 85% wipeout in the NASDAQ from the high. Or the market's done.
Well, that would make it worse than 2000.
Yeah.
2000 was, I think, 72 or 75% all in.
Yeah.
That would make it worse than 2000. I don't think there's anyone I don't think this is as bad as 2000. I just think there's similarities.
Yeah, but 95%? Like what? What would the NASDAQ be at 95% for the highs? Oh my goodness. I mean, Apple would still be bigger than that. So you'd have Apple. You'd only be trading Apple. What would that be? 95. Hey, Bob, you have your handy calculator there?
I do. Sure.
What the highs? I'm curious. 95% of 16,767.50.
Wow. You'd have to lose 15,928 in value.
And where would that put us?
What was the high again?
16,767.50.
Ah, crap. Hold on. 16,767.50.
Times
right?
0.05.
That's what I was just going to do. 838.37.
All right. Okay. No.
838.
That's sort of funny. I just like to do because, yes, I think we will have a much more substantial pullback. But no, we're not going to 838 in the NASDAQ. We're not even going below 2,000 in the NASDAQ. Pivot speak was baked into the market so to the upside already today before he smoked that the spoke. That's why the market's tanked.
Yeah,
I
I mean, again, I argue with the word pivot, but I agree. This is just a correction of those people who, of course, I was right. Pub. It's just a correction of those people who thought that there was some reason for the Fed to sort of announce that there had been progress made and they could pause. I don't know. I mean, I guess it could have happened. We now have, Mike, that sort of a debunking of the myth that if something's reported in the Wall Street Journal by what's his name, that it's definitely going to happen. I also saw somebody that I follow and respect on Twitter saying that, wow, I can't remember his name now. Bernstein, Jared Bernstein, that was not a slip up, that he slipped up, and that Biden knew the Fed was going to pivot. Bernstein slipped up, and then he tried to correct it to pretend that they don't talk. So somebody had a little conspiracy theory of that going on.
oh boy, P Dubs, you're asking for it. A broken clock is right twice a day. Oh, oh.
I think he's referring to Jimmy Iorio, but I'm not positive. Because that comment popped up when I said, "Keep saying it, Jim. You'll eventually be right." But I could be wrong. If it's me, let me know.
I'm just joking with it. We're just having fun here. It's been
Yeah.
a doozy of a
Good.
day, and it's not going away. We still have payrolls on Friday. We still have CPI print next week, which will cause reaction, and we have the big thing next is the elections, which options
Yeah.
22. Given the market action and conditions, I couldn't imagine anything but a sweep for the GOP House and Senate. Maybe the riot will happen, Bob.
He also asked about the reporter's name in there. It wasn't a reporter; it was a pollster, and his name is Frank Luntz. Luntz.
Yeah, there you
Frank
go. I did
Luntz.
not write down the name. Was the pollster Frank Lunch?
Yeah. Yeah.
Oh,
By the way, all of you. So there's a common theme in here that the Fed has now ended the rally, et cetera, so on and so forth. They didn't. They did not end the rally with today's press conference or statement. As a matter of fact, I think this will end up being a buy. I really do. All they did was wipe out the people that put on positions expecting the Fed to say we pivot. That's what they wiped out. Now it doesn't mean, again, he said we could pause at the next meeting. He said that. So now imagine CPI comes out, oh, I don't know. Let's say month over month CPI comes out negative. Okay. And let's say year over year drops because of base effects to below 7%. And let's say Friday, which is the next important thing, the unemployment rate jumps to 3.9%. We get negative job growth. Watch the rally, man. The rally will come and it will be strong. We now shift back to data dependent. We now have to look at pricing data and see what we think the Fed thinks of that pricing data. And then after that, pricing and jobs data. Jolts did not help. Jolts did not help. Neither did the last PCE core, which again, Pub, I talked about and I was right. From that perspective, you now have to look at data and try and make, well, first of all, we're not going to trade this. We're going to trade the charts. But if you want to enjoy the fundamentals, you now have to look at data and say, okay, what's the Fed going to think of this next piece of data, right? And then we'll see Fed speakers again who are commenting on the data. Waka, man, don't say no way, buddy. Do not say no way.
you're not talking year over year. It's not going to be negative. Month
Talking
over
month over
month could
month,
be.
month over month, month over
Not year
month.
over year. Let's. No, we're not
Month
seeing
over
year
month.
over year negative inflation print.
Now, I'll point to why I don't think it will be. Okay, I'm just saying don't say it won't. And I'm talking about the month over month again. And the core can be completely different than the headline. And I believe personally the Fed will latch on to any good news because it'll take the pressure off them. Oh, Coco's back. Um, the core core CPI, Coco, stop being so wrong all the time. Anyway, the core CPI month over month can be negative, and they can latch onto that. Okay, and they can latch onto that hard. Jobs data can be weak. Any one number in the jobs set can be weak. And so, look, for example, here's why I don't think it will be negative. We had ADP payrolls today, right?
Yep.
More jobs than expected, but the wage growth was smaller than expected, but it was still 7.7% wage growth on the headline number. But here's the interesting part. ADP private payrolls up 239,000 expected. What is that? 195, Mike?
195.
Okay. If you look behind the headline number, almost every category was negative. There were two categories that were positive. One was utilities that had positive job additions. It was like utilities and communication. You know what the other one was? Leisure and hospitality. You know what the number was? Plus 247,000 jobs. So essentially that 239 was all hotels and bars and restaurants. And within that sector, 11.2% year over year wage growth.
Whew.
Yeah. So like when you sift that out and you go, okay, well, how sticky is leisure and hospitality wage growth? Not very. Because the jobs themselves are not sticky. If all of a sudden we go into a slowdown and your local restaurant, because of inflation, has fewer customers, they'll fire the shit out of those bartenders and servers. They'll do it in a day. They'll just cut staff and cut hours. So it can flip on a dime, man.
Let me see if there's anything else that oof. Okay, hold on. Tomorrow, oops. Tomorrow, we got ISM non-manufacturing. Any significance to that?
No, I don't think so. Wait, it's the ISM one?
Yeah, non-manufacturing. So
Yeah, I would, if that one's negative, that's good for pauses.
but I mean, it's forecasted
That's
55 and a half. So if that comes out
I don't mean negative. If that were to go down below 50 or towards 50, that would be a really bad sign.
yes,
Also, though, it'd be a good sign for the Fed, right? Because services wages are where we're getting the big spikes, and that's where the stickiness is.
yep.
So watch for that. If that misses, it's not a big deal. If it misses dramatically, it's a big deal.
And then where's non-farms is projected to the 3.6. I'm just checking for Friday.
What's
So
the jobs? Two something?
jobs is 200K exactly.
Okay, I thought it was 205, but yeah, 200K. So imagine if that comes into 40K. The biggest miss I've ever seen on non-farm payrolls, I'll never forget it, was a 220,000 job swing from the median. It was expected to be like around 280,000 jobs, and it came out like 60 or something like that. So it can happen. You can believe the data or not. I don't really care, but I'm just saying it can happen. And if it does, you'll get those same pause, pivot, step down speculators coming in and buying this stuff.
So is good
Coco
news bad
says,
news, or bad news good news, or what news? What am I
yeah,
supposed to
bad
learn?
news is not good news. Coco said, I'm not wrong. The rally will continue after jobs data, but the other day he said the rally will come after the pivot.
Yep. All right. Real quick notes. Anything on the yield? By the way, notes. I was watching for this double the trigger.
Hmm.
What was that settlement? Wow. Oh, stop. The date. What do you have for your settlement on the notes? The 10-year.
Tell you right now. So I don't look at the charts for the 10-year settlement. I go to the U.S. Department of Treasury's Resource Center, so I'm getting the cash settlement. So is that what you're looking for? I'm getting the cash yield settlement. Are you looking at yield there?
What? No, I was looking at the price because there's a double. It looked like it triggered on the 4 hour, but the cash settlement is bizarre. Or the future
Is this
settlement, I
on the
should.
10-year?
Yeah.
Yeah, 410 yield, so up 3 basis points. It was actually below 4% after some of this morning's data.
So I was watching this double. Looks like it's triggered on the 4 hour. Let's take a look at the yield curve before you go, though. Where the
Mhm.
yield curve, I know the 10 twos holding
Got one
back now. We are back to the quad bottom area.
a quad bottom.
Quad bottom. My girl's got them.
So they used to call me when I was heavier. Quad bottom.
Quad bottom. So, I mean, it's sitting at this really interesting, significant 11. So the steepening is gone away again. No
Yep.
steepening. Back to wow, minus 50, what, minus 52 basis points.
Yeah, flatteners make more sense to me right now because I think we start pricing in and those people who didn't believe there was a recession coming believe it after today. And there's just more and more people saying that the recession is now baked in. It is what it is. It's done. It's happening. So, and that would be a flatter curve. So more inverted. That's what it would be on the twos tens.
So, uh, and then where did the yield finish? You said
What's
above
up?
above yields back above 4.09.
The
Yeah.
settlement is 410 on the 10-year.
All right. The settlement was 410. Huh.
Yeah.
Wow. Interesting.
Mm.
Very interesting. Eh. All right.
All right. Anything from me? Any
I'm
questions?
just
Anything
looking.
left?
Rams and fall. Welcome, Jay Powell. Don't even consider talking about a pause yet.
Mhm.
He did say that.
He did say that, but he
He's
also said we could pause next meeting. He did
he,
say that
he
too.
said, "quote It's very premature to be thinking about pausing. Very premature."
Hey, before I go, I think Christoph has an interesting comment. And I think it's important to remember that the VIX is priced off of options, not the other way around. So if there wasn't a lot of options activity, you wouldn't see the VIX go up. If there wasn't a lot of options mispricing, you wouldn't see the VIX go up, which tells me again that most of today's move post FOMC, and Mike, you could please chime in on this, was most likely people who were expecting a pause or a pivot getting out of the positions that were obviously wrong.
Yep.
Otherwise, we would have seen the VIX spike if it was more of a panic because you would have seen people going in and trying to get all the insurance they could and the market makers doing what they needed to do, et cetera.
Nope. It's now it's going to be interesting over tomorrow and Friday to see the secondary reaction back up. That's going to be very telling.
Mm,
And the news is now. I mean, we have a massive election next week. There's still stuff. It's not like we can go just celebrate the holidays and go start cooking our turkey early because we. I mean, there a lot can happen in the next couple weeks.
yep.
So, especially if this election we don't get the results and it drags on with contested races and it could be tipping it one way or another and they're contested. This could
Yep.
it could be a super. I'm just waiting for a couple days off
Right.
at this
Can't
point.
wait.
You know, I will be glad to not look, but see, can they just close the futures on Friday? Can we just have two, like literally? Oh, so Ted, then you go let you go. What's your play going forward, Bob?
I've only got two positions right now. I'm long crude oil. Did that on Friday on the podcast. And I have a small S&P long with very wide stops. That's it. I don't have anything else going. I might get out of the S&P long and maybe reestablish it. We'll see.
All
But
right.
I'm not advising anyone do it. You got to do it off the charts.
Are you still stopping by tomorrow afternoon?
Yes, I'll be around tomorrow afternoon.
All right. Well, we'll get to see what happens tomorrow then.
Well,
And with that, I'm going to go through a couple charts, and then I need to stop watching red and green bars for a few minutes. I actually need to go to a bar for a few minutes.
all right,
Oh,
Mikey. Cheers, guys.
all right. See you. Thanks,
All right.
Bob.
See ya.
Hey, everybody. Thank you, everybody, for tuning in. And everybody new, trying to keep it a little lighter, have some fun with this. Again, thank you so much. Uh, hey, vertical dimension. If I missed, just type something back in. If I did not, say hello to you. If I did not, because I think it's important. Uh, heard that the Fed funds climbs above the 2-year yield, they will pause. Again, I've heard stuff along there, but you know what? They're gonna keep tightening. Again, other stuff we didn't touch on. Uh, there was one thing I wanted to talk about still, but we can't keep Bob forever. Powell saying we want to avoid making the mistake of not tightening enough or loosening too soon because they have, and this is a paraphrase, they have tools to, unwind the stuff if they go a little too far. So they're more willing to go a little too far than err on the side of doing it underdone because of where they view inflation. So that could be slower to hikes, but keep going for a longer time with a higher terminal rate, which could put it over 5%. So we should see that. It'll be interesting. I mean, longer term, I'm watching for the next major down leg. Do we have a crazy down pattern yet? No. No, no, no. We still have, by the way, earnings season. We still have more weeks of that. Roku was a gap down, wasn't it? And Qualcomm was down. I did not have a chance to look at anything else today, just for sake, and then we'll get to the charts. Tomorrow, before the open, we got ConocoPhillips, Moderna, oh, Peloton. Have Has somebody taken them over yet, or are they going bankrupt first? Or going to file for reorganization first? By the way, fan of the product, not of the stock. Uh, so that's where we sit tomorrow morning with the earnings. I think I went through everything else. So I was watching where the S&P. By the way, if you're familiar with our Head and Shoulders stuff, if you're using the aggressive stop on a move below the walkaway trend line, this would have ended the pattern after the stop raise. The conservative stop still down at 36.61. So I'm going to keep monitoring the pattern here. And I was watching on a closing basis reference to last Thursday, because that is a key little pivot point, and we did not close below it. So we closed right at the 37.5, but no close below this, and this prior breakout zone here still holding support. So yes, we did break the first level of support, but holding the second level of support. So tomorrow is going to be fascinating. And if we start breaking down below 37.60, my short-term target is 37.15 at the 50% retracement of this move. That. And we're getting daily cycles closer to the bottom finally. Weekly still getting to the topping area. So we still have through probably next week of potential longer term upside bias. And once this gets down to the bottom, we might get a double bias still up. And that's where I'll really start watching for the next significant rollover move. So remember, this is clear path on 1 hour, even on the 15-minute. There's only there's a little pausing bar here. Here was the rate hike. Here was the speaky speak. The Powell speaky speak. You do have clear path to the upside. So if there are any bullish biases that trigger something, there is now a clear path to the upside. Is it a trade just into the clear path? No, we need some kind of trigger or signal. But for overnight, about 37.80 first level resistance, and then there is not much. You have to go back. You have to go back. See, we're having dueling clear path moves. Remember, we had this clear path move that created the upside, the double, the volatility, the move, the close into the clear path below the walkaway trend line, and then taking out those key levels. So don't be fooled that if there is we got numbers coming out tomorrow. If something triggers a rally, you can easily snap back at least partially through this clear path. And the breakdown zone, based off the 1 hour, is back at 38.43. I'm more focused tomorrow now on, if we do rally, the strength of the snapback rally, because as I've talked about many, many times, the secondary reaction, if we go down tomorrow, then I'll be watching Friday for a potential secondary reaction. The secondary reaction is a really telling move. NASDAQ closing below the 62.5. Not closing below its 30. So the NASDAQ sending a different message. The S&P still holding above some key support. The NASDAQ is still holding above the middle of October lows, but now below the 62.5. This is where we're getting mixed messages. Also, based off the walk away stop and the 62.5, this pattern is done for the NASDAQ. For a bearish side, still favoring the NASDAQ. For the bullish side, looking for the S&P and Dow are the two. So if we get bullish action, those are the two I'm looking for first. Bearish action, shorts would be in the NASDAQ. But there is no solid pattern in the NASDAQ besides watching for a rollover play based off that closing basis. And closing below all major closing support. This is the lowest close now since Friday the 14th. Because this is below the close even for Monday the 17th. All these closes are higher than today. So on a closing basis, this has wiped out, 2 weeks of closes. Do not ignore the power of closes. Too many people just walk away. If you look at the line on close chart, here you go. Let me take off everything. If we just look at this, this is pretty bearish. And why? I think people should more often, they view this kind, it's just one line, but it's the close. And the close of any bar is the most important. And you look here was the little reversal consolidation. Okay, before this rally up, this was the end of the, where they had to stop with their, their speaks, their Fed speaks. And look where we are. On a closing basis, we're back into this area. Even on the closing basis, the low before the final low area, we're back below that. So this has wiped out a lot of price action in the NASDAQ. We're seeing some substantial divergences between. So overall, you also have, remember, tech-led stuff for many, many years on the way up, and now tech's proving to be the Achilles heel in the NASDAQ. So That's why I'm not looking to the NASDAQ for any bullish plays right now. I'm looking to the NASDAQ for bearish plays. S&P still, because it's 500 stocks, and we can still have bullish plays. The pattern's still in place. The Dow only being 30 stocks, actually eking out a high today. This was, I mean, and this was technically a little double. You could not have traded on a closing basis, but it just went up, running up, and then you got the collapse. If anybody was wondering, you could not wait for a close, which you can rarely do on Fed days. But it rallied up, if anybody was wondering. The Dow has only, yes, it is back below the 200, but reconnecting with the rotation zone in the 62.5. The Dow's got a long way to go before it turns bearish. A very significant moves. And yes, this is a clear path on the daily. However, if you look here on the 4-hour, there are some substantial stopping points. So, will be real interesting, though, if we do get the continued down movement, especially at daily close tomorrow, into the rotation zone. I am watching for this pullback to around 31,450 area for the next pullback, key pullback area. But since the Dow's holding up the best, followed by the S&P of the three majors, that's where I'll be looking for potential bullish plays. The Russell, nowhere after hitting the first target, not quite getting the second target. Decent pullback on the Russell into the rotation zone, but not even a close back below the prior breakout level. This is another one I will be watching for a secondary reaction back up to see if we get a more substantial bearish pattern. But we don't have it yet. Notes based off that. This is what I got to look in. I got to take a closer look because you have daily settlement. Looks like it did not trigger this double. It could have been triggered on the 4-hour. I have to double check this. But if this did trigger, it would favor a return to higher yields in the 10-year and lower price action, potentially retesting the lows from Friday the 21st. So that is short term. I'm going to watch how this reopens, though. Dollar wrecking ball after selling off. Hold on one second. I had to have a sip of my iced tea from my sip club at Panera. Not sponsored. So a quick little dip and then reversal. Now we have another outside bar from yesterday. So is the wrecking ball back? I got to see some follow through tomorrow. It didn't quite get to my 111.93 target. We get above that, then I'm really watching for this 112.62. The markets are so schizophrenic. We've already touched on the VIX, but we still have nothing invalid. Didn't even trigger this potential double, which is now a triple. This is off. The only thing I'll be watching now is if it breaks above the 4-hour rotation zone about 26.65. However, we still have the substantial bullish VIX play in place. So it'll be interesting tomorrow if we get some more downside, especially in the morning, to see if we get a reaction from the VIX or not. Crude still marching towards the second target, not quite there, and then we have a final target. Nothing else new to do with crude. Besides, if you wanted to, you could keep raising a stop on this as it's trailing. Why? Because this is still in an overall consolidation pattern, not even a breakout pattern. All right, Bitcoin. not triggering the double. Back below this key support 20,345, but not triggering the double. It's going to be interesting to see if that triggers tomorrow. Pound pulling back, breaking support, but not breaking this key thing. So that's what I'm watching for. With if that will reinforce more of a dollar rally if the pound breaks below about at 113.60, and the euro back to the 50% level from this run up move. If it breaks down, I'm watching for the trend line in the 97.45 area. Tesla this is going to probably turn into a triple after never triggering the double. Back below the 50. Tomorrow's going to be key with Tesla at about 213, about 40. That's going to be key tomorrow. Let's see. Let's see. Mike, he spoke about Taylor in response to a question regarding rates needing to be higher than inflation for it to come down. I have to recap. There was so much. I'm not recalling that one exactly. I'll have to double check that one. There was a lot going on this afternoon. I'll have to double check to see and that would be the Taylor rule. So I will have to double check that. But remember, they could sit and pause. They could get to what they considered a terminal rate as inflation is dropping, and then inflation could, they are hoping, get below their terminal rate, at least in the short term, and then they'll leave it there as it continues to drop. But if inflation stays elevated, like above 7%, and I think they might be talking about not the CPI. They were probably referring to the PCE. Remember, the PCE numbers are a lot closer to where the rates are sitting. So you're not going to need to have that much drop in the PCE, especially if they're going to get rates to 5% before you're into PCE restrictive territory, with the PCE numbers coming below where the Fed funds rate sits. It's not going to require that much of a drop. So don't go, well, that means they're going to have to go necessarily to 8% with Fed funds rate. No, that's not what it means, because they're most likely looking at the PCE, not CPI, to adjust that. Don't you see a potential daily on the S&P? This turned it into, this is a mess now with this third push up. It's technically a triple even on the daily. With this, it's too messy. And I look at the 4 hour, and with that push up, no. Where if we do get a close below this low, though, for 37.57.50, I will be targeting this rundown move in the area between 36.61 and the key close from the Thursday the 20th. 36.75 will be my target area. I'll close below 36.61.75. Everybody in here who's been in here for a while should know then what the next target will be. So it would sort of be rolling targets to the downside. I would not trade this as a double. What is Mike's rock bottom low for a bear market in the NASDAQ? A rock bottom low? Like where a rock bottom it probably won't exceed? My rock bottom low is probably about, it's just in front of 7K. I'll just go. Let's just go with my rock bottom low being around 7K. Rock bottom at this point. If, you know, right now my next bounce low after we get the next rollover in the S&P is now around 2800 based off of fundamentals. So that's, but my absolute low even in the S&P, oh boy. I'd have to be around 25 at this point. Can those lines shift? Yes. But are we going to wipe out 85 to 95%? No. Not unless now if there was a some kind of nukes start falling, ask me for a reassessment. That would be new information, assuming it's limited. Not that if we're all not here anymore, it really doesn't matter then, does it? Uh Sorry, he did not say that. That's what I would. He said rates has increased and they have meaningful decrease in core PCE. They would rather tighten more to contain inflation. Yet it means he has to go 6 to 7% if core PCE does not come down, and that would be with a terminal rate above core PCE. If it does not come down, but PCE is still, where is the core PCE? I forget where is the core PCE right now? Can somebody tell me what the last core PCE print was? Phillies or Astros? I'm going with the Phillies because I think the Astros are a bunch of cheaters. And if the Phillies win, it does not bode well for the markets. You want Netflix? The one waiting. Could somebody type in the core PCE number? Nothing's. I don't know why we keep focusing on Netflix because it's still in the daily rotation zone. And above the 200. The only thing it's, as I said before, it's trailing stop mode. If you get below, though, you start getting into this gap fill. Watch for a return to the breakout zone. So it depends where your trailing stop is. Cycles are finally getting to the bottom and worked out of overbought condition. See you, Rich. Astros are cheaters. Core PCE 4.5%. So they or now we have core PCE 5.1%. Fine. They have to get if it does not keep dropping, they have to get it at least above 5. If core PCE rises, then they'll look to get it above there. Right now it's at, I don't know who's right. I'll have to look it up. But let's just say you go either one, they're still not there yet. Unless that starts dropping rapidly, and that's why they say they're not done with hikes. Is the zero COVID rule ever going to end in China? I think it's way beyond just the COVID excuse. If you just look at where China is going under Z, it's not just about COVID, it's about societal control at this point. COVID is just a easy way to get the people to fall in line and get used to complete government control again. What the government says, you shall do. And that will continue. So, if if the COVID policy were to shift, it would just be some other policy that would be implemented, because the whole Chinese regime is going to that complete governmental totalitarian control model. And you shall do what the regime says. If we want to scan your QR code on your phone at any moment, we shall be able to do it. You shall not question it. If we want to arrest you on the spot, that will happen. If we want to shuttle you away, you will disappear. Hit me up tomorrow on that, Paul. But they're going to still say the problem is not about pivoting. The problem is any change in Fed policy, the word pivot is used. Like now, if they say we're lowering our terminal rate, oh, they're pivoting. It's literally that insane at this point. Raj is right regarding year-on-year core PC from October 28th. Thank you. Thank you, Christoph. So core PCE is 5.1. So if core PCE sustains or moves higher, they're going to have to view it as getting the rates above core PCE. They're going to give it a little more time, which is why they're most likely slowing the rate of increases, which is not a pivot. But they're going to get it there and have to leave it above the rate of inflation for a sustained period of time to get rid of it. All right. I am tired now. It has been a long day. Mike, what I loved about this conference is Jay Powell clarified there is no pause or pivot. I agree. However, the word pivot is not being used as the way Jay Powell uses the word pivot. He's using to actually say we're pivoting our policy. They're not pivoting their policy. We're not going to quantitative easing. We're not going to rate cuts. So many other people are using pivot as any change in policy, meaning it's like today, people said, see, they're pivoting for December because they say they could slow down. No, there's a change of pace. It's not a pivot. I keep getting hammered with this. I agree with you, Raj. They are not pivoting or pausing, and they took pause off the table for an extended period of time in my mind. Bob may think differently. We don't have to agree on everything, but again, it is very premature to think about pausing. Very premature. The other thing, the risks are asymmetric. If the Fed does too much, it can cut. If it doesn't tighten enough, then you're in real trouble. What does that tell me? Okay, so they can slow. Remember, I talked about this even yesterday or the day before. Remember when 75 was considered like, they're not doing 75 ever. Now, how many 75 hikes have we had? How many hikes have we had at 75? And now people are just saying, like, a pivot's going to 50? People are just insane. That's why words to people don't mean anything. You know, it's just a word of the day, and people use it to try to trigger things. Oh, look, they're pivoting. It's just their excuse to say, oh, see, I was right, they were pivoting. Well, no, because originally you meant pivot was QE or cuts. Then your idea of a pivot was any change. Then your idea of a pivot is just because you think they might do something. Yeah, pivot equals cuts. Pivot or QE. This is why I'm tired of people using this silly word of pivot. Let's just imagine walking down the street. The Fed's been walking at a very brisk pace, if not going into a slow jog. That's been 75, 75, 75, 75. If they, hey, we might feel a little winded, I'm slowing my pace, I'm going to 50. Doesn't mean they're going to slow down again. They could do 50-50. They just slowed their pace. Even going to 25, what would that be? Hey, I'm slowing it. I'm getting still a little winded. I'm slowing it down a bit more. I'm at 25. Stopping and putting your hands on your hips, saying, all right, I'm out of energy. That's a pause. You're standing there panting. I got to rest here for a minute. Although it's not the healthiest way to end a run. You should go into walk mode. But maybe then 25 could be walk mode. I don't know. In my analogy, I'm making up. What's the pivot? The pivot is turning around and going home. We're not going home anytime soon. We haven't even stopped to put our hands on our hips yet. So as long as we're on the same page with that, we're fine. But it's ludicrous to say that the pivot is going from a full pace run to a jog, or a jog to a slightly slower pace. That's not a pivot. A pivot's turning around and going home. And then if you have to start cutting, the rates of cutting would be how fast you're running home. Like maybe you ran into a bear market, and you got to start running back home. That's then you're pivoting. And your pace could increase on cuts. So, Charlie Brown thinks Lucy's football is a pivot and missed every time. So there we go. All right. That's where I'm leaving it for today. I will be back tomorrow morning. So, I hope everyone has a wonderful night, and see everyone later. Bye for now.